Welcome, ladies and gentlemen, for a special edition on the Fund Awards. We have the pleasure to have William Davis here with us. Mr. Davis is Chief Investment Officer of Columbia Threadneedle Investments that has been awarded as Best Equity Manager by the Tate and L'Echo. Welcome, Mr. Davis, and congratulations.
Thank you very much indeed. It's a great honor, so thank you very much indeed.
Equity markets have performed quite well since the beginning of the year. We have records in the US. What are actually your expectations for the equity markets for the coming months?
Well, I guess it's quite a remarkable start to this year because what's happening is that we are seeing equity markets continue to rally. I mean, they've rallied very strongly since the lows of March last year. And as we go through 2021, we don't only see economic recovery, we're going to see a recovery in earnings in terms of profitability around the globe. We're seeing unprecedented levels of stimulus as well from governments in terms of fiscal stimulus, but also monetary stimulus and the QE from central banks. So there's an awful lot of support for economies, for equity markets, and we've seen some rotation there into some of the more cyclical areas of the market. So we expect that to continue as we go through this year. But we do believe that there is further upside for equities, given the improving economic environment, given the improving profits which we see within companies. So further up as we go through.
Now, if you look at the regional allocation of your funds, emerging markets seem to be overweight. What is the reason?
Well, you're absolutely right. We are overweight in emerging markets, and we see some terrific opportunities within those emerging markets. We certainly see in terms of China, faster recovery last year from the pandemic, but that growth will continue as we go through next year, this year and into next year also. If we look at commodity prices, we're seeing a recovery in certain prices, which will also benefit a number of those emerging markets. So if we look at that economic growth, if we look at the earnings growth, we can see actually quite reasonable valuations within those emerging markets, most particularly given the growth in economies, the growth in profits and earnings, which affect not only this year, but as we go through the years as we move forward.
Okay. Lately, we have seen a correction in technology stocks, Nasdaq going down. Was this correction for you a buying opportunity, or do you think tech stocks are too expensive?
Well, we have to put that into a little bit of perspective, I guess, because technology stocks were very strong, relatively speaking, last year, and absolutely speaking from April onwards. And so when we see this stimulus that I talked about, the fiscal stimulus and the monetary stimulus, and accelerating nominal growth around the world, that will benefit some of those more cyclical companies. And so we have seen a rotation in equity markets away from some of those growthier companies, such as the technology companies, into some of those more cyclical companies. However, if we look out over the longer term and look out, say, for the 2020s, we do believe that the stimulus which we're seeing at the moment can't continue forever. And so consequently, when we start to see more normalized fiscal and monetary policy, that actually will be seeing lower rates of growth, lower rates of interest. And that is an environment which will benefit those companies which can grow irrespective of the economies and where we see the secular changes like technology. And so I think you're right. Some of the corrections that we've seen within those technology stocks, in particular those stocks which have strong cash flows, strong earnings, strong growth, there we believe there are buying opportunities which are opening up right now.
Okay, thank you very much, Mr. Davis, for your useful insights. And ladies and gentlemen, if you want to discover more about the Fund Awards, please have a look at our websites, the Tate and L'Echo, for more information. Thanks for being with us and hope to see you soon.